Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we are continuing to work with our yesterday's algorithm, which we are developing using Bill Williams Market Facilitation Index along with the price action. For the price action, we are utilizing the historical candles, and by now, I hope you are well familiar with the technicalities of the Market Facilitation Index. We are particularly concerned with two outputs only, the MFI up along with volume up, and the second is MFI down and the volume is also down. And then comes the ATR. ATR, as you are aware, we mostly use it for the optimizing purposes. Before we get started, this is a standard disclaimer. Here I would like to remind you that this station is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs and also allow it to run on the demo account for sufficient enough time to get a clear idea of the efficacy of the said algorithms. Nothing in the webinar is to be constructed as an advice to trade or any particular setup. With that, we go back to our business, and the business is to develop a profitable algorithm. Sometimes you succeed, sometimes not so much. So, here today we are starting again, and the basic idea has been that we continue to look for a combination. The particular combination is that the last candle on the hourly time frame should have a BWMFI reading which is up and the volume is up, and the prior candle should have shown the MFI down along with the volume down, and then we turn our attention to the price action. We check on the historical candle if there was a good enough volatility, and it should have closed with gains for a buy trade, and it should have closed with losses for a sell trade, and the prior candle should have been in a opposite trajectory. That is, the trend should be reversing. So if it was earlier bearish, then now it should be taking a bullish undertone, and if earlier it was bullish, then now it should be turning on the bearish side. So that is our requirement. And then comes the question of what can be the optimum stop loss and the target price, and for that we are simply utilizing the average true range on the hourly time frame, and we are utilizing the multiples. We will keep the stop loss equal to the ATR, and we will double it for the target price. So that will be the combination. Now let us see what we have done so far on the Visual GForex platform. Here we did the standard instrument subscription. We are working with the Euro USD. Then the position amount has been set at 0. We got these two BWMFI blocks, and we have set them on the hourly time frame while putting shift 1 and shift 2 just to look back 1 hour and then the prior hour to determine if the conditions are being fulfilled. The price action is being studied with the help of the historical candles, and this will help us guide make a decision depending on the volatility. Here comes the ATR also on the hourly time frame. So all of our major technical indicators are set on hourly time frame. Then we turn our attention to some math. We do some calculation expression thing. We subtract the high and low of the prior candle, and we figure out if the difference is more than the average true range. That is, the volatility at least should be higher than the average volatility, and then we also see if the closing and the opening price also carries some price momentum. That is, with the help of the ATR, and we are taking 50% of it to do the comparative analysis. And then here we have brought in this 10 seconds bar just to get precise entry point, and for that we will be utilizing the last hour's candle closing level, and then we will be comparing whenever the momentum just starts to rise above or below the prior closing value. We will be going in for a fresh trade, and as I have said in yesterday's session also, we are sticking with the market open, so we are not doing many of the complex calculations like order validity time and the buy and the sell entry point calculation this time around. Maybe if we tomorrow decide to kind of optimize this setup, maybe we will think about it. But for the time being, we are working with the simple setup, and now is the time to start working on the buy side. So let us bring in some fresh blocks, and for that we have to turn our attention to the component section, and here we get the logical part, and in logical we have multiple actions. We will keep one row empty just in case we need to do some further optimization. We will have the space to bring in the required blocks and maybe even calculation expression. So you never know. We are working with tricks and tweaks and we have to be alive to any possibility for us to be successful. Now let us get some a block. Let us go higher only. We will directly take the values, and the first requirement is going to be the BWMFI output, whether it is as per our requirement or not. So here we go. Now we take in the shift one value here on the hourly time frame, and as I said, we are only concerned with two outputs. So if it is going to be a buy trade, we need the last hours MFI should have been up with the volume up, and as I have said earlier also, and you can do a bit of googling too, at one point, at any time, only one particular value of all these four outputs will be above 0. Suppose if the MFI volume up is above 0, that means naturally that these rest of three values will be equal to 0. Suppose if second value is above 0, then the rest of three values will be 0. Similarly, for these values also, if the MFI up volume down is above 0, then the rest of three values will be equal to 0. So we only want that MFI up and volume up should be above 0, and that will mean rest of the values are 0. So the market facilitation index should be going up and the volume is also going up. That means that new market participants are getting actively involved, and then comes the prior hours question, and there we want the waning of interest. That means that the trend is likely to reverse. MFI down, volume down, and here we need the value to be above 0. And then we turn our attention to the historical candles, closing levels, and I think we will now need to join this and then see to it that the volatility is there, as we have done a lot of calculations as well. Here above 0. Okay, I will show to you on the chart as well. So here the MFI down, volume down is above 0, and as you can see, okay, now we will be able to read it. Let me do something so that it is kind of clear to you. Now see, at this instance, when the MFI down and the volume down is above 0, the rest of the three values, the MFI up, volume up, and the MFI up, volume down combination, as well as the MFI down and the volume up combination, is also showing the value equal to 0. So that is our requirement, that the MFI down and the volume down should be above 0 in the penultimate hour, and then we will be all set for our trade if rest of the conditions are also fulfilled. Now is the time to look on the volatility and the price action in the last hourly candle. So we take it, we need the candle 17th data, and we have done a fair amount of calculations as well. So we can straight away turn our attention to the HLD, and that HLD, let me, okay, so we want the HLD to be greater, that is the last hour's candles high and the low difference should be more than the hourly ATR. So we take this. Now we need other conditions to be fulfilled as well. First let us join these dots. It should be greater than. Okay. Now we want the opening and the closing levels to be some trading has happened, I guess. We will close this. Even my demo account, as you can see, has some algorithms running here and they keep trading. I'm not personally involved. Okay, let me see what kind of trade has happened. As I can see, one short sale has been done in the Euro USD. Okay, let it be. Now what we were doing, we were checking on the difference between the last hour's closing and the opening level, and we want the buy difference to be more than half of ATR on the hourly time frame. So we take this result BD, and we have done further calculation here. This FT is, I think, let me just make sure once again. Yes, so we have multiplied the ATR value line 19 by 0.5 to get 50% of the ATR, and the open and the close difference should be more than 50% of the ATR. So we take this and we do the comparative analysis, and here comes, okay, now is the time to bring other if conditions. So the next thing we will need to do is that we have checked for the MFI conditions, all right, and then we also ensure that volatility should be good enough for us to consider any trade. Now The next thing we will need to do is we will need to figure out the entry and the exit points. I think rest of the conditions have been fulfilled. So it's a pretty simple algorithm. So let us take these 4 if blocks and then we will join the dots and complete the setup. Here we will connect this one. The by difference should be greater than, so it's like greater. All the 4 conditions we have done so far require the first value to be greater than the second value. Now we take this to where it belongs. Alright, we got here. We join it and we arrange this. Oh no, what's wrong? Oh, it's alright. Okay. Now, the condition was fairly simple, so we haven't really required much of a time to set our requirements and proceed for further builds. So here, the next thing we look for is that once the last hour's candle close, we want it after that the price action should show a upward momentum. So whenever the price will start to rise above the closing level, we will be going in for a market open trade. We are not really waiting or utilizing the pending open in today's session. Maybe we will try one version with that kind of combination as well, but for the time being, let us keep it simple. So we will need now the candle 17's closing levels and then we compare it to the 10 seconds uh, closing levels. So here is hourly candle and that is candle 17 with shift 1 and we take the candle 17 shift values, the closing values. So here we look for auto created variable candle 17 and the candle 17, candle 17. We need the closing values. So we take candle 17 close here and then we take candle closing here. And now we need to compare it with the candle 24's and candle 25's closing levels. Candle 25 is shift 2, which means its closing level should have been less than the candle 17's closing level, candle 25 and its closing level, candle 25's closing level, and here comes, it should have been less than the 17th level, and then whenever it starts to rise we utilize candle 24's closing level and it should be more than. So far so good, we are pretty much on track And now the time is to bring the market open. So we take the market open requirement and where is the market open? We will get it in the trading section. Okay, open at market. Buy at market. Default instrument, alright. The trade amount, we will hard code it so it won't change. And it is, as you are mostly aware, we stick with 0.1 million lot size, and the default slippage will be of 2 pips. Okay, stop loss. We have done some calculations for the stop loss and the take profit. So here we bring in the stop loss and the take profit, where we have left our stop loss and the take profit, the BSL. I think yesterday I had named it as buy stop loss and buy target price, but on the both sides, even during the sell, whenever we will complete the sell side, we will need to use the same combination. So it's essentially SL and TP. Okay, so now the stop loss is the stop loss. Oh no, I think we didn't do the conversion. This kind of variable won't fit here as it is in the double type, so we will need to remove this. We remove it and we need to do the integer type setup. And let me see if we have any variable currently named SL or TP. We have a variable TP. Okay, so we freshly name this. Let me get some idea what to name it like. Okay, stop loss pips, so it will be like SLP, and okay, SLP sounds good. To me it sounds good. SLP start value, it will take the value of the result of the calculation. We don't do anything. And here also we create a fresh variable, stop loss pips, target price pips, TPP. Here also it will be the result of the calculation, and we do these changes, target price, and so far so good. The buy side is finished. Now is the time to go to the lower. Okay, we will need to connect this first, and we shouldn't forget what is the requirement. If the candle 25 has closed less than the last hourly candle, then we will need the candle 24 to have closed above it. So we join first input greater than the second input. Now we have got the connection here, the flow. So here we have done this buy side almost is ready to trade. Now we can develop the sell side, but the issue is we will need to do the testing as well. So suppose if we do the sell side, then I'm not really sure if we will be able to complete it in our half an hour scheduled time. So maybe we finish it off here and we come back tomorrow, we complete the sell side, and then we also do the test run. So let me just take a one look if it is good enough. Even you can try to complete the sell side on your own depending on how we have built this buy side, and it should be essentially symmetrical, so you just have to invert the conditions, and then if you kind of didn't succeed, if you don't succeed, then I will be back tomorrow and we will be finishing the setup in tomorrow's session. Anyways, so that's it from my side for today's session. If you have any query or any idea to share, you can write it in the comment section. I would be more than happy to take the discussion forward. Have a fun time ahead, guys. See you tomorrow. Goodbye.